April 8, 2026, Bitcoin's back above $72K. Iran wants Bitcoin for ship tolls, and CZ just started a war via memoir. Quick shout out to today's sponsor, Compete Token, the gaming crypto that actually has real games behind it. Link in the description. Bitcoin just broke back above $72,000 for the first time in 3 weeks, all because Trump posted a ceasefire on Truth Social. The US and Iran agreed to a 2-week pause. Iran reopened the Strait of Hormuz, and BTC jumped 2.6% in under an hour. The order books are actually looking healthy. Binance's cumulative volume delta hit $5.6 billion, up $3.3 billion just in April, and spot demand is net positive on both Binance and Coinbase for the first time since February. Analysts are watching $72K as the line in the sand. Hold it, and $80K to $90K becomes a real conversation. Iran isn't just reopening the Strait of Hormuz. They're charging Bitcoin to use it. A spokesperson for Iran's Oil Exporters Union confirmed ships will pay $1 per barrel of oil in BTC, and vessels get only seconds to complete payment after an email assessment, specifically because Bitcoin can't be frozen by US sanctions. This isn't Iran's first crypto rodeo either. Their central bank quietly grabbed $500 million in USDT back in January, and blockchain analytics firm TRM Labs tracked $3.7 billion in total crypto flows through Iran in the first half of 2025. Iran has been running a shadow crypto economy for over a year. Now they're just doing it publicly on the world's most important oil waterway. Institutional money is flooding back. On April 6th, US spot Bitcoin ETFs logged $471 million in net inflows, the biggest single day since late February, led by BlackRock's iShares and Fidelity. Total ETF assets under management climbed back above $90 billion, and Morgan Stanley launched its own Bitcoin ETF today, pulling in $34 million on day one. Not record-breaking, but this is Morgan Stanley, one of the most conservative financial institutions on the planet. When old money banks are running their own BTC products, Bitcoin's mainstreaming is basically complete. The New York Times dropped a full investigation today naming Adam Back, the British cryptographer who invented Hashcash and was literally cited in the Bitcoin white paper as the most likely Satoshi Nakamoto. Back immediately denied it, pointing to his old X post where he says, once again, he's not Satoshi. The story was written by John Carreiro, the guy who took down Theranos, which makes it impossible to dismiss. He used stylometric analysis, matching writing habits, formatting quirks, and hyphenation patterns across Back's early work and Satoshi's forum posts. No cryptographic proof, so the mystery lives on. But Adam Back is definitely having a rough Wednesday. Wall Street firm Bernstein dropped a research note today calling quantum computing a manageable upgrade cycle for Bitcoin, not an existential threat. Their estimate, the industry has 3 to 5 years before quantum computers could realistically break Bitcoin's cryptographic security, which is plenty of runway for an open-source fix. Here's the catch. About 1.7 million BTC sitting in old P2PK wallets, including an estimated 1.1 million attributed to Satoshi, are the most exposed addresses. Modern wallets that avoid address reuse are largely fine. Michael Saylor also weighed in today, calling the quantum risk overblown and saying Bitcoin has most likely already bottomed. The SEC named David Woodcock as its new enforcement director today, starting May 4th. His predecessor Margaret Ryan resigned in March under murky circumstances, and U.S. senators are now demanding answers on whether she was pushed out for resisting the decision to drop fraud cases tied to Trump allies, including the Justin Sun case connected to the Trump family's World Liberty Financial. The SEC's own 2025 enforcement report is something else. The agency retroactively declared that its past crypto cases produced no investor benefit or protection and called them a misinterpretation of federal securities laws. The SEC just publicly roasted its own enforcement record. That is a vibe shift of historic proportions. The U.S. Treasury dropped Genius Act implementation rules today, and stablecoin issuers are officially about to become bank-like gatekeepers. FinCEN and OFAC issued a joint rule requiring stablecoin companies to run full AML and counterterrorism financing programs, maintain OFAC sanctions compliance, and have the ability to block, freeze, or reject transactions on demand. One blockchain intelligence CEO put it bluntly. That means significantly more wallet freezes, transaction blocking, and asset seizures at scale. The White House did throw one small bone. Their Council of Economic Advisors said banning stablecoin yield would do very little to protect bank lending. pushing back on the banking lobby's attempts to gut the product. CZ dropped his memoir Freedom of Money today and immediately reignited a decade-long war with OKX founder Star Shu. The book claims Shu got Huobi founder Leon Li arrested, accuses Shu of market manipulation, and implies Shu informed on Justin Sun. Shu fired back on X, calling CZ a habitual liar. There's a 2015 notarized video from OKCoin showing what looks like CZ sending two versions of a contract, one with a sketchy 6-month termination clause, that Shu is now resurfacing as evidence of forgery. This beef has everything: forged contracts, exchange implosions, Chinese government arrests, and Justin Sun cameos. It's a crypto soap opera, and I am here for every episode. Standard Chartered is pulling its crypto custody subsidiary Zodia back in-house, according to Bloomberg, folding the custody business into its corporate and investment banking division while keeping Zodia alive as a software platform. An announcement could come this month. They're not alone. Morgan Stanley and BNY Mellon are doing the exact same thing. The pattern is clear. Big banks first paid startups to build crypto custody infrastructure, and now they're absorbing it directly. The era of the specialized crypto custody startup might be quietly ending. Zcash went absolutely feral today, up 30% to $336.50, its highest price since January, riding the ceasefire relief wave hard. ZEC woke up and chose chaos. The problem? Analysts are already calling it a bull trap. A 2021-style fractal suggests a potential 40% crash could follow, and there's $50.5 million in long liquidations sitting below $260 versus only $3.8 million in short liquidations above $380. That asymmetry is not cute. Enjoy the green candle while it lasts. That's a wrap on April 8th. Before you go, check out Compete Token in the description. Gaming crypto that's actually building real games. We'll be back tomorrow with more. See you then.